Okay, so this is your simulation from capital structure part 1. It has got 3 exhibits. Let's first see what is required. The controller of AMH Incorporated has asked you to calculate the firm's weighted average cost of capital, WACC, using the following included in the exhibits, that these 3 exhibits. Complete the table below, calculate each required WACC component identified in column A, and enter the amount in the associated cell in column B. Enter all values as positive numbers, round dollar amounts to the nearest dollar, and percentages to one decimal place. Now, what exactly is required? We need to calculate the cost of retained earnings, cost of preferred stock, and after-tax cost of debt, and then total market value of the common stock, total market value of the preferred stock, total market value of the bonds, and finally the weighted average cost of capital. It is always advisable to just have a quick overview what has been given. This is the email from the controller. Let's see what does he say. This is the email from the controller, and he says, "Dear Pat, as you are aware, the firm is planning to make several capital investments over the next year. We need to establish a hurdle rate to use when evaluating the investment options, and I have decided to use the firm's existing weighted average cost of capital for this purpose. I have already calculated the historic growth rate of AMH's ordinary dividend to be 4.1. This is G, which we use in dividend discount model, but I don't have time for any further analysis and need you to complete the calculation of WACC. Note that the firm pays income tax at the rate of 30%. So 2 important pieces of information. One is the growth rate to be used in DDM, and second, the tax rate. And then it further says kind regards, and that's all. Next, we have extract from a data stream. And what information do we have? Common stock par 0.5, important information. Trading at 4.7, this is P0, the current share price. Ex-dividend, exclusive of the dividend that might have been declared. Ordinary dividend per share 0.363. Remember, this is the dividend paid now. It's D0, not the next dividend. 12% preferred stock par $10 per share, trading at $12 per share. We need to keep that information and need to write it down on our papers that are given to us in Prometic Test Center during our exam. And the last one, 7% bonds, 1,000 is the par, trading at 105.45. and without interest, and pre-tax cost is 6.86, so which we can simply use to calculate on after-tax basis. And the third component is given as your balance sheet at the end of December 31st, year 5, current assets, non-current assets, liabilities, and equity. So this is all given. Let us start first with what we are required to find out. The first thing we need to calculate as per the sequence is cost of retained earning. So we have our current share price, we have the growth rate as per this extract from the data stream, and all we just need to do is to do the computations on the sheets that are given to us, and that's all. So what we are looking for the current share price, the current dividend, and we just need to plug them. And remember, the growth rate as per the email was 4.1%. So you just plug this in your formula. That is D0 into 1 plus G upon current share price plus the growth rate. And we have these numbers 0.363 times 1 plus 4.1% divided by the current share price, that is 4.7 right here, plus the growth rate which is given in the email as 4.1. So if you simplify this all simple arithmetic, this factor would give you 8.04%. To this we add 44.1%. So your final answer is going to be 8 plus 4, 12.14. So that's the answer to your first question. 12.14. So we're just going to write 12.1 because the question explicitly required to use one place after the decimal, and here we go. Next, cost of preferred stock. For this, we need to come to this extract from the data stream, and we have everything what we need to calculate the cost of preferred stock. So just look at this. We have been given, let's first erase the screen clean. We have been given 12% preferred stock, par 10, currently trading at 12. We know how to calculate cost of preferred stock. Cost of preferred stock is the dividend, which is 12% of 10, that is 1.2, divided by the current market price 12. So cost of preferred stock EPS is 1.2 upon 12 times 100. So it is 10% straight. Done. Next, after tax cost of debt. That is available right here. Right in this exhibit. We just need to take this 6.86 and then just convert this into after tax basis. Cost of debt is equal to 6.86 multiplied by the tax rate was given in the email as 30%. So if you just simplify, you should get your answer as 4.802%. So we are going to write 4.8 and that would be all. 4.8. Okay, done. Next we have the row 5, the total market value of the common stock. Now this is something that requires some analysis of your balance sheet. Remember, the par of the common stock is 0.5 and currently it is trading at 4.7 that was given in the exhibit that we just discussed a little while ago. So here it is. Okay, so I can clearly write on the screen, but remember, you will have to do it on your rough papers that are given to you for working. All right, so just plug in the numbers. We have $4 million of common stock book value. Each stock has a par of 0.5. We just saw that a little while ago. So 4 million divided by 0.5. That means we have a total of 8 million stocks outstanding and each has a market price of 4.7. So multiplying these stocks outstanding with the market price 8 million times 4.7 should give you 37.6 million. 37,600,000. So this is the market value of your common stock or the market capitalization value. So here it is. It's 37,600,000 and that's all. Next, the total market value preferred stock. Remember, our market value of each preferred stock we just saw a little while ago was $12. Let me show you. It's right here in this exhibit, $12 per share, and the par is $10. So let's apply this information right here on our balance sheet and we will get our answer right here. Now look at this. Preferred stock has a total book value of 1 million. Each preferred stock, let me write this down. Each preferred stock has a par of 10 and the market value of 12. So that's the simplest way. Divide it with the par, multiplied with the market value. It will give you straight away the market value of the total preferred stock. So 1 million by 10 times 12. So pretty straightforward, $1.2 million. That is the market value of preferred stock. Just plug it in. Just plug it in. 1.2 million. And there you go. Then total market value of the bonds. Again, it's a fairly straightforward question. Very straightforward. Here we go. We have our bonds right here. 3 million, remember. And if you remember, the market price as given in this exhibit was 1045, if I remember correctly. Let me show you. So just keep this in mind. 3 million is the book value of the bonds and the market price is 1045 exactly. So that's a fairly straightforward calculation. Now you're going to divide 3 million par value of the bond with the par value of the single bond. This will give you the number of bonds that we have sold multiplied with the current market price, and that's fairly straightforward. That will give you 3 million by 1000 multiplied by 1045. That will give you the current market value of the bonds, that is 3135,000. So just plug it in. 3135,000 and there you go. Alright, what do we have next? Okay, the last part says calculate the weighted average cost of capital. So we have got everything what we need on our screen right now. These are the component costs of capital, retained earning, preferred stock and debt, and these are their market values of stock, preferred stock and bonds. So if you add all these, The total of this would be 41.935 million. 41.935, right? So if you divide each of these market values with this total, you can calculate the percentage. The first one comes out to be 89.66%. 1.2 upon 41.93 will give you 2.86. I pre-calculated these numbers to save your time. And the last one, 3.135 upon 41.935 million, will give you the weight of 7.48. So these are the proportions of the funds deployed. Their relevant cost of retained earning is 12.1. Preferred stock 10%, I'm taking from here. And the cost of debt is 4.8. So if you do all the computation, it's going to give you just the weighted average 11.4939, and if you approximate, it's going to be 11.5%. That's going to be your final answer. 11.5% is the weighted average cost of capital. 11.5, and there you go. Done.